What's up, guys? Thanks, Luke. Glad to see you're here. Hey, Jen. You're so early, there's barely anyone here. I know, people will trickle in. How's the mood today? Placid. I don't turn Discord on the Sunday stream. Never have. I feel like you know, because I have to call Dork and JFresh, and I have to do that on Discord, so I can't have multiple voice channels open simultaneously. No worries, Seaweed. But like the beta thing? Just like make sure you know that if you're in the beta and you have to, yeah, if you have to drop it and renew later, like you'll have to reach out to us because we'll have to like set your account back up again. But it's not a big deal. Thanks for sharing the paper. It was a great morning read. I thought so. Yeah, no problem. You just probably have to like reach out to like me or Nuke or Dork, and when you're ready, and I'll get you set back up. What do you think about Car? I haven't looked at it in a long time. I used to trade it pretty often. Interesting, but I don't know. I feel like the hospitality services industry, which car rentals are generally a large part of, is not doing so well. However, I do think that over the last few years, the usage of rental cars for things like Uber and Lyft has largely been ignored by the market, and they've based a lot of the forward pricing of those companies solely on their on the health of the hospitality industry. So I think there's like a little bit of mispricing there, but I mean, Avis is probably a bit overvalued right now. This was not a good summer for hospitality, I don't think. Move a vol play for OPEX. Yeah, it gets it runs. I mean, just go like watch the options chain on it. If shit gets compressed and short calls are falling off, then it's probably a fun OPEX play. I don't know what the I could go look at it. Yeah, it's like under DN right now. It's not picking up a lot of delta on the chain. IVHV are very low. There's negative delta to the upside above like 170, but it doesn't look so hot at spot. Seems like interest contracted and has been dying off. Out of the money, there's like big swings in IV, but skews pretty negative. IV relative to historic vol is extremely high. Yeah, I mean, I would say it's really interesting if it falls under 150 or goes above 170, but where price is right now, pretty dull. It's definitely a little bit bearish. Carl's FTD page is gone, and I can't be arsed to go digging. I could ask him to spin one up for you guys. Yeah, it's always done that. It used to be like one we tracked or followed. Well, like me and a few other people played it pretty often. I played it a lot back in like 2022, 2021. But it usually didn't, I mean, back then it didn't run on OPEX. It ran like start of the month, if I remember. Yeah, it used to run the beginning of the month with ETF FTDs, and then usually like into earnings or after earnings. So I think again, I think it's just a lot of mispricing. Yeah, it was a run tech play too. Hmm. Suspicious. Would it be theoretically possible to replicate the Python charts in that paper that broke out gamma OI divided by volume, by market maker, customer, etc.? Yeah, technically, if you have access to the research data, but a lot of that data is, old, so it's. mm. You can get a 15-minute report out of SIBO that's like $70,000 a year. That could speed that process up a little, but there's inconsistencies with that, and it would only be SIBO. So equity options, no. Equity options, you'd have to get historic reports. Is the Fed doing a hawkish 25 bippy? Yeah, we'll talk about that when Dork and JFresh get on. Now's the time to ask about stocks. If you guys want to ask about them. Everyone bitches that I don't write up Pickles picks with individual equities. And you've got the chance to ask me about the individual equities you care about right now. I'm sure it's Solana. Yeah, I can make fun of you. Okay. Isn't the Solana network getting bought out? Becoming even more centralized than it already is. I guess it's a stock now because of BlackRock. Yeah. Probably bearish once it goes through, but probably also mostly speculation until it does. This is a cup and handle. So resistance at 264, 295. I've played Solana a few times. I had a bunch of it, like when BTC started to run towards the end of last year, or like into 2024. I bought a like decent amount of it down at like $15, but I got rid of it all like around 50. I think I found my edge with Greeks by expiry and sell side strats. I've been killing it lately on condors, leverage longs, depending on net long or short gamma. Okay, that's good. Yeah, no, that's perfectly valid. I don't see any problem with that. BTU? Do I have that pulled up here? No. Still holding up. Still probably heavily affected by China, but also, dollar depreciation can cause energy to rally. Obviously, the current administration wants to lean into coal, so if there's any news on that front, it can benefit from that as well. I still think BT is extraordinarily underpriced given their cash flows, but I do know that they were making another acquisition recently. I don't really follow BTU that much anymore. I mean, like I own some. Oh, it looks like they didn't. They torched the deal apparently. Why can't I open these? Oh, awesome. Calls off 3 point. Oh, okay. So that's probably bullish. At least short term bullish. That happened end of August. Seems to have caused some price improvement. Maybe people will be happy with them not spending the money. Why aren't any of these fucking pop-ups working? Fuck you, TradingView. You piece of shit. Alright, hold on. I gotta try to fix this. CoreWeave? I don't know if I'd be short Micron. Micron's a big beneficiary from the government stimulus. I, I did pick up some long vol last week. Not short term, like 60 to 90 day exposure. And yeah, I mean, I just don't think vol's getting much lower. I don't know what would drive it up in the near term. Well, I do. I can think of a few things, and we'll talk about that a little bit later in macro. But I do in fact have a little bit of long vol exposure. It's just pretty decently priced right now. But the last couple of times I've gone long vol, the pullbacks haven't really been all that insane. Like we got spikes in volatility, but they were very brief, and only seemed to incentivize more vol selling, at least at the time. Do you think Micron will keep going then? It could. I mean, I'm out of the position that I had on it, but yeah, I mean, I don't see why not. Everything else is massively overvalued. Micron's just like back at its all-time highs. But they've been doing very well since, was it a Pickles pick or like a Sunday stream pick? I don't remember. But I went pretty in depth on why I thought Micron was a good buy a while back. I'd imagine that's when you bought it. I don't remember either, but my $7 call is now $30. It's been doing well. They've got earnings coming up, which may not be great, but I took my profits on that much of a move. I ended up getting out of mine around like I think it was like 130 or something. I just had some leaps on it. I wasn't a very big position. Um, Someone made me look at CoreWeave. Well, CoreWeave bounced off of DN, which is the last thing that we talked about on it. Was CoreWeave gonna bounce? It did, super fucking hard. Looks like it found support on the gap fill. Maybe that'll continue to fail or push higher. I guess see what happens with the profit taking after whoever shorted the top of this. Looks like there's some resistance at 115, not a ton of support at 110. Big gamma into OPEX. It should be kind of stabilizing. Yeah, I guess it could continue to fail. I think it'll really depend on what happens on the retest at 115, which it does look like it's going for. Close there, 111. Did that retest 115 already? Kind of did. Broke out, failed back, retested. Hmm. Yeah, that might have kind of retested already. There's quite a lot of room for it to come down. Hmm. Looks like they're still in the money, put OI coming in. A lot of closing of call positions in the money. Looks like sold calls out of the money, probably. Skew's starting to turn a little bit more positive, though. So, yeah, this might, I mean, this might continue to fall a little bit. It does look like, Ivy is still skewed to the downside a little. Maybe 100, but there's an awful lot of interest down at like 80, 80, 85. Ball moves up real sharply to the downside. So I would say probably a continuation of the downside in the near term. I don't trade Nikkei much. Like, not active trade. Sometimes I go long on it. But usually like swing trades. Most international stuff swing. I don't generally like day trade that kind of shit. Fixie is interesting. Yeah, I mean, Fed rate cut, same like BOJ rate hike, and frankly, we could theoretically get both. So, that would be bullish for the yen. I don't know if it'd be bullish enough for the yen that Fixie would be worth it, but could be. Wheeling Fubo, any thoughts? I mean, Vol's still high on it, but it's going through an accumulation period that looks largely bullish. Generally, not a good target for wheeling, unless if you mean by wheeling, you're simply just selling puts. And yeah, selling puts on the lows has been decent. I mean, Vol's high. You do have to leverage up a lot to get any kind of substantial gains out of Fubo, though. Not something I would like actively wheel. I mean, I still have some shares of Fubo, but I usually just sell calls against it when IV spikes. I'm not selling any puts on it actively. I mean, maybe if it dropped back to like $3 or something like that, I would consider it, or like 260, but haven't been selling puts on it for some time now. I think the last time I sold puts on it was like when it retested $3, and that was fucking months ago. June, or yeah, maybe it was June. It's not bad for wheeling. I mean, the chains, you don't have the best spreads on some of the options, but usually the monthly options on it are fine. You have a unbelievable number of call sellers, so liquidity on the call side is usually pretty good. Still overall bullish on Fubo and its chances of pricing up. I mean, I don't know. I made like 400 and something percent or 500% off of it. My my cost basis is be like way, way, way below zero at this point. So the shit I have left, I mean, if I get assigned on it, I really don't fucking care. And at some point, Disney's going to come in and dilute, so that's something that current shareholders have to consider. Um, Upstart looked kind of interesting last week. It sold off pretty hard. Looks like it's kind of double bottoming around 60. Obviously, very impacted by the rate decision, so this could be a rough week to play it, but if rates get cut, Upstart's probably going to run like a motherfucker. At least initially. Oh yeah, Upstart looking a little bit fun. Bounce on Friday with GNDN diving. Like Dexa's picking up. Gamma move positive. Got room to push back up to like 67, 70. It looks like somebody sold a shitload of puts down at 60 and 58. Hmm. Yeah, that looks a little fun. Might be still kind of choppy locally, but there's not a ton of room left to the downside. Where did it test on the low? It's like 61. Pretty clean balance. Yeah, it didn't fail DM. Hmm. Yeah, I kind of like that. Upstart looks pretty bullish. A bunch of folks had $4 cover calls out there. Hmm. They probably got assigned. If you take a look at SoFi, sure, but I hate it. Looks bullish. Nothing particular. It doesn't look super interesting, but it does look bullish. There's room for it to move up to like 29 or so. Yeah. There's a couple bucks of upside on it. Potentially. Anything not look bullish? Probably. Like, financials have been doing really badly. Health tech. A lot of tech services haven't been doing well. Like last couple of weeks. Consumer services got hit a little bit on Friday. Producer manufacturing is probably still massively overvalued. I would say energy is probably undervalued. We haven't seen any like rotation into health tech, but health tech's probably going to continue to fall until there's either news out of the administration or like about tariffs on pharmaceuticals or tariffs on pharmaceuticals or changes to Medicaid, Medicare, health insurance. So there's some sectors that don't look so hot. Yeah, no problem, man. All you have to see is Upstart. I'm full porting calls. Jesus Christ. Oh, I wish Godspeed regard. AR. That's a name I haven't heard in a long time. It's cheap right now. Picked up quite a lot of sold puts. Chain's a bit slim, but there's interest all the way out to like 40. Yeah, I could see that continuing its bounce higher. Probably slow gains. If the sanctions on Russia go through, they could be a big beneficiary of like price improvement there. Yeah, Jesus Christ, look at that. Fucking skew dropped to like -13. It's almost back to positive. Falls pretty flat at the money. Yeah, this actually doesn't look too bad. It's got a bit of a grind to get up, but above like 36, 35, 36.50, I think it starts to get a little bit more supported at least. I don't know if playing the delta neutral breakout is worth it because it's struggled with that previously, but maybe playing the gamma neutral breakout would be potentially really good. I would probably want a lot of theta on it. Delta's starting to pick up a little, but this is probably like a very slow chain to turn around. I don't think it's gonna. And when it does, it'll probably be very rapid. So I don't know, maybe set an alert on it, just keep an alert at like gamma neutral. The chain definitely would look a lot better if it was supported, like if the upside were supported by the MM. RCC? What's the other one? Hmm. Assume not the senior notes. So just RC? RRC. Oh, sorry. Range resources. Oh, this is also oil and gas production. Yeah, sure. I mean, this like why not like Schlumberger or I don't know, Halliburton. I do like how I'd be cautious being overexposed to like oil field equipment and services. I mean, they definitely benefit for stronger sanctions against Russia, so that'll be a tailwind. But having two, like I have a little bit of HAL that I bought recently, um, and some left over from the last time I sold like in the money covered calls on it. Hmm. I have NOV too. NOV was my like that's like my other exposure to like oil field equipment and services. I do still think they're undervalued. I I will note that I would like to buy that stock at $10, but that might not happen. Can you please take a look at CRSP? Nailed the top last time, 70-ish. Wondering if this small bounce has legs. Worth buying calls again. Yeah, sure. That's definitely got a little bit of momentum behind it. There's some resistance here, though. I feel like, yeah, probably like 57.50. Um, looks like vol picks up above 60, so excuse turn a little bit positive. Mm, Delta falls off super hard above 60. So there's like probably a little room for it to move up, but it's going to run into some resistance here. Climbing higher than that, not sure, but I guess if it does, there's maybe a little bit more range out to like 62. It's not a lot of interest between like 60 and 70 though. Real slim. It's like put OI's falling off on the bounce, but that might be sold puts coming off. There's some pretty strong profit taking right around here with very little interest to the upside. So I would say probably have a very hard time clearing 60 right now. Um, there's going to have to be some reason for it to continue moving up, I think. Over time, it's bleeding quite a lot of delta, so I think interest might be waning. Also, doesn't look like the support was particularly strong. So yeah, the tiny bit of upside left, but probably not worth playing. I don't think they have earnings until like end of October, November. So not a lot of tailwinds from increases in vol yet. Maybe if it holds 60. Well, I'm thinking like if it holds like above 57 for a little while, then maybe there'll be another push to the upside further out into like October. You could, yeah. I mean, it's a little risky to sell calls above 60, but I probably wouldn't put a lot of theta on them. But maybe a few weeks until things reposition. No, I don't fuck around with covered calls on NOV. It's got a dividend. Generally, if a stock has a dividend, like I don't play covered calls on it unless there's a very liquid options chain that allows for additional yield to be extracted, which is pretty rare. Um, and NOV's options chain's just illiquid anyway. Something like ZOM, maybe. ZOM has like a pretty decent dividend, and you can usually sell calls on it. But I'm short puts on ZOM right now. I haven't sold any calls since like I think since it like last tested 115. Street 2 map. Welcome to Zillionaire, man. Thank you so much. Hit me up on the Discord and I'll get you added to the country club after the stream, dude. Well, if AQN, well, if rates get cut, AQN's going to benefit from having their debt burden lifted a little bit. Also, I mean, technically, AQN's in like inverse, like big old inverse head and shoulders right now. So, um, I mean, I think things still look pretty good there. I think did they just pay out their dividend? I feel like I got a notification. No, it's coming up end of September. We got earnings November 6th. I mean, they've been doing all the right things. Probably not probably not getting out of AQN for a long time. It's near term price action's not super important to me, but it's still up like 25% or so. 555 was a pretty important support prior to the prior to the failure last year. I mean, I think over time they're gonna continue to improve in price as they lean more into their legacy business and get rid of the debt burden. They've been doing a good job. Everything I wanted them to do, they've been doing. So I mean, you can just go back to the original thesis. I haven't changed it. Cash flows have been picking up the last quarter, so I hope that's something that stays on track. I think they got total liabilities down to about 8 billion now. From I think I think when it first started, they were around 11. So that's pretty significant. Utilities and telecom will benefit a lot from debt being cheaper if that happens. Hertz? Oh, I don't know. Is Ackman still in it? Sure. Yeah, there's a bit. It's starting to look kind of bullish. Not a lot of interest above 750 though, so range is kind of shit. Unless it squeezes. again. Hmm. Big old fucking pilot in the money puts. Put and call OI. Interesting. So someone's doing a strangle there. Curious. Okay. Strange. 5,000 contracts. Ivy's starting to move a little bit. Ivy bumps hard over $7. So maybe it's just that this isn't like a great range to play. It's it's a bit of a gamble. Delta's been increasing pretty steadily. Gamma's moving up. Breaking out above GN is going to be a bit difficult, but I think overall the positioning on the trade is getting more bullish with time. Yeah, I don't hate it. It definitely hasn't seen the price improvement that like Car has, so yeah, could be like a fun gamble. I mean, it's definitely a big risk, but if it were to break out above GM, it could maybe run off a little. I guess like the Vega on it could squeeze, but probably not worth playing that just because the likelihood is so low. It's far more likely everyone just piles into sold calls around 750 and crushes the price back down. Hmm. Anything else? There's some fun stuff. I thought Amazon looked kind of interesting into the end of last week. Google seems a little cheap. Yeah, puts on Google are really cheap right now. Holy shit. Microsoft looks like it's starting to turn around. Nvidia just paid out their divvy. Hmm. Tesla? Probably resistance at 400. Tesla's way outside of Gamma Max again. Yeah, big resistance at 400 on Tesla. Probably some profit taking there. Running out of gains in IV to the upside. Historic fall starting to tick up on the 30 day. Does anybody even know why Tesla was up, or did they just need something to pump that was big enough? Just really excited about paying Elon $1 trillion. Yeah, their 1 penny dividend. Was ASTS just a cult type thing, or is there an actual thesis? I thought it sold back off. Wasn't it? Wasn't it dead? This looks like dog shit. It's distributing out. Hmm. I guess like the test down at like 36, 35 is kind of important from a long-term perspective. I wonder if this gets like a bit of a near-term bump. Skew adjusted gamma looks like it's ready to turn around. There's a little bump in delta on Friday. Looks like it slipped everyone's sold puts. Hmm. All the gamma on the chain is positive. Looks culty. Look at all the fucking out of the money bot calls. Yeah, they still don't make money and their margins are disgustingly bad. Possibly some local support, small bounce. Maybe up into like the 40, 42 range. And then I don't see why it wouldn't just fail again at that point. One of those where you take advantage of the cult and sell them calls. Well, I mean, not when everybody and their mother is buying calls, but, you know, probably an opportunity at some point to take advantage of that. Uh, yeah, might push back up into Gamma Max here before failing again. At least the risk level is really tight to spot. So if you want to go long, you know, you can probably cut risk at like 36.50 or so, 36, which isn't too bad. And then you know the upside's like $5, which isn't awful. Five, maybe $7, I guess. I wouldn't want to own it, but it's volatile enough that it's probably like good to trade. They're like in direct competition with Starlink, but not nearly as well funded. I know they got a downgrade recently. But back in like August, insiders were selling a bunch of shares. I would say Qualcomm looks a lot more interesting than ASTS. Hmm. Drake, you're so based. What would we do without you? Probably just follow someone stupider. I'm kidding. Yeah, man. Anytime. But if we're talking, I mean, if we're talking about who's gonna benefit from like a satellite to phone network system the most, I feel like Qualcomm is gonna benefit a lot more than ASTS. They'll probably also benefit from Starlink's push into Telecom as well. ONTS ran after you mentioned it. Looked interesting. Does it still look interesting though? Yeah, pushed up to like the $6 range. It's probably going to start to run into some like long-term resistance here. This is right around the price where it IPO'd, so baggies will want to get out. Long-term, like cup and handle though. Maybe it pulls back to like 330 again, and then I'd be maybe interested in a buy around there. I think that was about the price it was at the last time we talked about it. What about Carvana? I, I told Pippi we were shorting Carvana last week. I'm already in one. Oh. I still have my K view from like way back when. I kind of forgot about it. I was just collecting like the dividend on it. But I mean, they're trying to prove that Tylenol causes like autism in babies or some shit. Could Corsair run soon? Is that Corsair? Why? It's just been nothing but like I feel like Corsair's gonna like go out of business. Yeah, tariffs fuck them really hard. Also, they weren't doing great before that. They've really been kind of shit in the bed since like 2023. They do offer like some of the only publicly traded exposure to that very particular sector, though. but I do think with tariffs right now, that sector is not doing so hot. I don't think a lot of people are running out and buying new computers right now. Also, like, for the last couple of years, like, the reasons to upgrade and stuff have been kind of shitty. So, I mean, that company's very dependent on that ecosystem being strong, and it's definitely very cyclical. How are you shorting Carvana shares? No, I have 380 puts. I said I was going to short it when it tested 380. I did, and I did. I did short it when it tested 380. What? No way. No way, what? No, 380 was like a huge resistance on Carvana for it was literally the target when we went long Carvana at like 325. And then that was supposed to be the tippy top. Carvana doesn't really benefit a lot from the Fed rate cut. I don't think it'll matter for them. If anything, it might actually make their position worse. Because I think we'll talk about that in a minute. But I think things on that side of like corporate credit are about to get really 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 bad. I think that's probably the catalyst for the next crash. It could be the carry trade still, although that is in a slightly better position. It's still a bit over leveraged. What's your price target for Klarna? I don't know. I mean, people will just like buy shit and then not pay Klarna back, and then they'll go out of business. So the second we get the hint of a recession or unemployment rises, Klarna is just going to get fucked by literally everyone because who's going to pay them back? I wouldn't. Like, if I was poor and I had to choose between my rent and like paying back Klarna for some bullshit I bought off like Amazon, guess which one I'm picking? 100% of the time. So eventually zero. Bullshit on Amazon. I think it's just a bad business model. Yeah, people are already like financing their fucking groceries. That's not going to go well. It's predatory lending, just in the worst possible fucking way. It's open credit to literally everyone. That's not a successful fucking business model. I don't care about Figma. It's not Adobe. I don't know. People like it. I'm sure they'll do fine among the like 400, like 4,000 graphic designers that give a shit. StubHub looks interesting, but I don't like IPOs. They're a waste of money. That's just how you get rugged by insiders, which is what happened on Figma. Sounds like MBS. Yeah, probably. I mean, subprime lending is going to be a problem soon. It has to be. You can't like, if the average household's making what, 91,000. I played Weeble because I use Weeble. Also, they're like Weeble's Chinese owned, and the like insiders weren't going to be able to just bail at the initial IPO. Like they had to wait, they had a lockup period, so there was like a little bit of room for that to be advantageous. But yeah, if you have like 91,000 a year in the average households, and three thousand of that's going to rent every month. Who the fuck can afford like $700 to $1,200 a month car payments on top of that? This is like what rent should be, and people are paying that in addition to their rent. This is like any kind of economic drawdown, of which we have plenty right now, and this is going to decrease, and this is going to fuck people. I mean, well, they're really paying like 3,000 to 5,000 a month, rent or mortgage, right? And food prices are up, so you're looking at like a family of four, probably like 22,000 to 2,500 a month in groceries. Yeah, that's fucking ridiculous. So subprime auto lending, prime auto lending even is a big problem. We just had a like major auto lender go under like last week. They fucking went belly up with like billions in exposure. That's definitely gonna become a thing. That's the average household income, 91K. Or median household income. But it varies state by state. The mean is 144,000. Excluding the 1%, it probably drops to like 70K. Probably. But you could just, if you really want to, the average salary, the average salary is like 63,795, like single person. So if we go this way, right, which after their tax burden brings them down to like 50, probably around like 54, and then you got probably $1,500. What's the average rent? $1,700, $1,800 to 2,000, so you say 1,900 a month. Car payments $700 a month. Groceries are like 500 a month. So you got $37,000 a year and just like shelter and shelter, food, and transportation, which represents what 73% of their income. That number should be like 35%. This is bad. This is really, really bad. From like a broad economic perspective. Everyone. This is like the price of a new car. Have you seen interest rates on vehicles? They're like fucking like 7% with perfect credit up to like 15-20% for subprime. So this is actually more realistically like 700 to like 1500 a month. And used car prices are up too. So that doesn't help. But that's like, you know, what right now, if that person could even save money, which they probably can't, because that's not factoring in like utilities and other expenses, but if we have like a $20,000 vehicle and they were able to save 10% down, they're financing it like 9% interest for 60 months. Yeah, if there were a $20,000 car, they'd be paying like 373 a month. Subprime credit, they're paying 400 a month. I just went vehicle shopping, and about the cheapest thing I saw was about 25K a month, which means you're looking at like 511 a month. And then any like mid-range vehicles like 32,000 plus, which brings you up to like 600-700 a month, and that's really where it kicks off. Now tell us how lowering rates will help these average people. It won't. It's not going to change anything. They're already locked into these shitty fucking loans. Yeah, Lightstream is like one of the largest subprime lenders right now, and they're not even that subprime, and their APRs are like 7 to 16.5%, 15.5%. And if you lose your transportation or you can't afford your transportation, then you're looking at like losing your job as well. The current average car price in the US is $48,000. So if we're just going to continue using averages, say they could put 10% down at 12% interest for 60 months, that's $978 a month. And it's not like car prices are going to improve with tariffs, right? That's why I bought a new car now instead of waiting. Or, well, leased a new car. Yeah, that brings down the monthly payment, but It doesn't, that doesn't help you out like long term. I mean, like by the time your loan's done, the devaluation in the asset is almost complete. So you're really getting not a lot when you walk away. Did you pay interest on the lease? I think it was like 1.2% APR was like the money factor, which is low. I mean, it's not gone, but a little bit. I mean, leases generally don't have a lot of interest packed into them because you're just paying the depreciation, which is already a write-off. Do you just remember what it's like to be poor and is tripping? Who, me? I remember acutely what it was like to be poor. That's why I worked so hard to not be poor ever again. It's the new car financing is great if you can get it, but if you're subprime, the only thing you're going to be able to finance is used cars, and then your interest rate fucking doubles. So you're still paying the same amount of money, you're just getting a shittier car. Yeah, it's wild. How old are you? 30 something? I don't know. Old. Getting there. I pulled my back out like 3 weeks ago. That's how old I am. Anyway, let's get the nerds in here. Hey, weirdos. You guys are on the stream, but you're muted right now. Because I didn't know what you were talking about, so I muted it. Oh, okay, I'll unmute you then. I didn't realize it was just.
Penises are great.
Yeah. I
Big
assumed.
old cock.
Yep.
Old? Like specifically old?
Yeah, big and old, yeah.
Okay.
I like my elderly gentleman hung.
As one does,
I'm just
I guess.
I'm breaking in my my new grill.
What are you cooking on it? Hot dogs?
Nothing right now. I'm just running it for an hour at a
You get
certain temp.
you get one guess.
I guessed hot dogs.
Quesadilla.
Big old penises.
Oh.
I thought that's why you had penises on the brain.
Actually, it's just nothing right now. It's just running hot.
You
Speaking of
gonna
hot dogs,
you gonna
I made
smoke a
hot-
sausage?
I made, brats last night. I might go eat one.
Did you make them with beer and onions in a pan?
No, I just bought beer brats from the store and put them
Yeah.
on the grill.
Nice.
What makes them beer brats? I don't know. They taste just like regular meat brats.
Yeah.
So what's up?
I don't know. We're just gonna. Everyone wants to talk about macro, and I didn't want to talk about macro until you guys were on the stream. So
What do they want to know?
they want to talk about the only thing that matters, which is the FOMC
FOMC?
decision this week.
Which is number of oil refineries that are active right now.
Of course.
Yeah.
Yeah. That number's been oscillating.
What do you mean you can't hear them? Everyone else can hear them. Stop being deaf. When VIX calls, I bought some already. Well, not VIX calls because those are dog shit, but I have volatility exposure. JFresh doesn't agree.
I don't.
JFresh thinks I
I
should
think,
wait to buy my volatility exposure because it'll be cheaper later. What he doesn't
I
know is
think
that I'm just going to buy more if that's true.
Well, sure, if you're willing to double down, there's you get that flexibility, but
It's called DCA.
yeah, okay, and it's classy.
Yeah.
Um, everybody's gonna buy protection, then nothing ever happens. The FOMC is gonna do exactly what everybody expects, and then they're all gonna sell those puts and crush vol.
See, I think
the DTE gang is gonna launch it.
I think the only important thing is, are they doing QT? Or are we doing QE? If QT continues, I think the market's fucking borked.
Well, sure, but the market's always fine until it isn't, right?
Yeah, sure.
Yeah, we talked about this a little bit last night in our super secret project that we're working on, but
yeah, we did.
But yeah,
we just have to have that conversation
J-Pal's,
again in front of people.
Yeah, I know. JPal's been pretty adamant that he's not going to do QE until rates are at 0. So I would be surprised if they do. I mean, I'm not going to be completely surprised because, nobody's a bigger cuck than JPal.
True.
But it seems really unlikely that they're going to start buying assets with rates, above a few percent.
Well, we should probably discuss the dynamics of what happens if they don't start QE. And I think in reality, that's what the market's betting on right now. I don't think that the market is betting on a rate cut because a rate cut of 25 points does basically nothing currently. Even a rate cut of 50 points doesn't really do anything substantial. It's not like credit markets are going to loosen or conditions are going to get significantly better. So that's not the thing to be bullish on if we're being realistic. Like, none of these institutions are like, oh man, I can't fucking wait for rates to be 50 points lower. I think what institutions are banking on is that on-RRP is about drained. The Treasury's issuing, another 1.3 trillion in debt over the current quarter and the next quarter. And I think they think that because RRP is no longer there to protect bank reserves, that the Fed is going to step in and buy assets again. And I don't think they are. Not only do I not think they're gonna, I mean, like, I agree with you. Like, not only do I not think they're gonna step in and buy assets, but I'm pretty sure that if they do step in to buy assets, that's probably even more bearish than if they don't. But yeah, I mean, everyone's just banking on QE, and I think if QE isn't part of this decision, then shit's gonna get pretty bad, because not only do banks need to absorb 1.3 trillion, like the prime dealers need to absorb 1.3 trillion from the Treasury, but there's another like $8.7 trillion in corporate debt that's being supposedly issued over the next 3 years, and some portion of that is going to have to be also bought by those banks. And so, with 3.2 trillion in reserves, that's a pretty rapid drain on those reserves. And once those reserves start getting hit, margin ratios start to dive, and their ability to carry some of these trades is going to be very negatively impacted. So.
Yeah, I mean, we also hit. I mean, this quarter, the Fed Z tables dropped, and we hit the highest the highest percentage of wealth in stocks for households ever, like since we've been measuring it back to the 50s. And it's like 31 or 32%. And even if you normalize for the drop in pensions that have happened recently, if people were all in before, they're now all like super duper double, triple all in now.
Yeah, and institutions are
so
just not. They're just not in. Not the way retail is.
yeah, and they probably don't have much appetite to be in with all of this, all of these other assets that they have to, or liabilities they have to buy. I guess they're assets. Yeah, so it becomes a question of like, how much higher do we go? What was really interesting to me was this last quarter, the amount of cash that households were sitting on didn't really go up. It exploded in the first half of this year, or the first quarter, maybe the last quarter and the last quarter of last year and the first quarter of this year. Household cash exploded upwards, like by hundreds of billions of dollars. But this last quarter, it was basically flat. The value of stonks went up, but people weren't really adding cash. So that is interesting. So for like the future of valuations, right? I mean, wage growth is going to have to pick up even more for it to actually, make a meaningful dent here.
Yeah, and it's not like additional super sticky wage inflation is something the Fed wants to see.
Yeah, wages are still going up too much, right? On
Yeah.
average. Which is curious because it's like, why aren't they? Where's all the cash going, right? So
I thought AI was supposed to come in and get rid of the wages. That's what I was promised. I was promised that AI would remove the wages. I mean, that's what the market's priced in, right? Is that these companies suddenly don't have to pay people and they don't have expenses despite tariffs, and everything will be perfect forever and always. And Oracle's going
the
to
problem
solve
is that
$500 billion worth of shit that doesn't exist.
to a company that won't make it, yeah.
Yeah.
Yeah, it's all really, really cool and good. It all makes a lot of sense. There's no risks. You shouldn't be concerned. You should just be excited for AI slop. The middle. We all get the same thing. But yeah, I mean, could we keep going up? I mean, the reason that I was kind of hesitant to be like, this is it, is because there's so much charm right now going into September OPEX.
I think some of that's starting to erode, and I think we saw some of that erode Friday. Now that we have the data for that.
Well, we don't have the change in OI until Monday morning, so I'll be interested to see what that looks like before open on Monday, tomorrow. I don't know that. I mean, for things to continue to go down, there has to be pretty consistent selling. I don't know. I kind of think that there's a pretty good chance that we just drop like a rock after, like not tomorrow, but next week.
Yeah.
Because it is one of the biggest OPEXs we've ever had. Per usual. I mean,
did you check? Yeah, there's a lot of fucking calls falling off.
It's like 1.8 trillion. Pretty close to that in terms of delta, which is actually larger than December leaps from last year, which was the last time we hit this much. But then we have another, 1.6, 1.7 trillion already sitting at this December, right? So that one's probably could grow even more, right? So it'll be interesting to see when all of this capital gets freed up, where does it reposition or does it, right? How much of that 1.8 trillion that's expiring this Friday is going to get repositioned to December and or January. That's going to take some time to see, but it'll be interesting to see how it goes. Because if it doesn't reposition, or a significant fraction of that is pulled back to say buy up all these, all this debt issuance, then it's going to be real hard to maintain these levels.
Zork,
Yeah.
where's your corporate bond chart?
Oh shit! I'm outside watching the grill.
All right.
But so I looked at it last time I looked at it was on Thursday, and we're just kind of hovering around just crazy low spreads. We actually hit a record low on AAA, triple B spreads on Monday, I think it was, or last Friday. So, once again, it kind of begs the question of, well, is this because of the good reasons or the bad reasons? And I mean, if we think about what's happening, you kind of have to assume it's for bad reasons, namely that I think it's that AAA effective yields are rising, which the data corroborates, and that the actual risk profile is starting to flatten out a bit. So, yeah, I think there's definitely some apprehension going on in terms of all the financing, and I mean when you consider things like, I think we mentioned this last night too, like the whole SoftBank debacle. How much are they planning on funding now between Oracle and what was that, OpenAI? It's like $800 billion or something like that.
Mm-hmm.
Like,
Oh, I don't know, because the only thing I know is the SoftBank. What is it called? The light.
Operation Lightspeed.
Stargate. That one's something like 500 or 600 billion, but nobody has the money to build it, right? They're still trying to find it. Stargate is basically at this point a data center in Abilene, Texas, that's being built by this small crypto mining company on behalf of Oracle, but Oracle's not even paying them. They had to raise their own debt to build this, to fulfill a contract with Oracle, who says they're going to pay them for the data center. And it's not even clear that this is even related to Stargate, because the project was started before Stargate was created. And so Stargate doesn't actually exist, and the money to build it also doesn't exist. So, and that is completely separate. Well, I guess it's probably related. It's hard to tell these days. It's probably related to Stargate in the sense that, Oracle will figure out a way to build all these data centers, and then OpenAI will find a way to pay them. So it's in a way, if this is just another rehashing of Stargate, then they're just re-announcing the same thing they've already been announcing over and over again, for half a year. So, yeah. But nothing's changed, right? It doesn't exist. The money for it doesn't exist. And it's unclear how it will exist in the future. So,
sounds bullish.
Yeah, and then in the meantime, you have all the other hyperscalers who are also building out data centers that for the same purpose, right? So the question becomes, who gets zeroed on this and who wins?
Yeah. I mean, ultimately, who wins is the people selling the hardware.
Yeah, they are currently winning.
I mean, that's it. And it's just a big question mark. I mean, right now, right, big tech companies are flush with cash, right? But how much are they willing to dip into that to build out all this crazy stuff?
Yeah, they're not really flush with cash anymore, right? Like, for example, Meta's pretty much blown through all their free cash, and they're gonna have to issue debt to keep building data centers. Meta is a really interesting one because they're kind of a mess, right? They spend all this money to train llama and nobody cares, nobody uses it. And so now they're kind of like they just keep starting over, but every time they get less and less far. So now they're just like literally starting labs, and then they just like implode before they even do anything, and then they start it they start it again.
That's just what Meta
So
does.
I really don't understand what their long-term plan is, other than buy a bunch of H100s or GB200s or whatever. Kind of same thing with XAI, right? Like they just churned a bunch of data taggers, which is really important if you're making big models and you're trying to improve the models. Statistically, you need better relationships between data sets, and so you need all that data to be tagged, and humans just do that tagging. I don't know why, but they fired like 500 of them. So I'm not sure what their future plans are.
I think their plans are to train their AIs on the 60% bot population on their platform.
Well, that's another problem too, right? The dead internet theory is coming true. They predict, I think it's something like by next year, more of the internet will have been generated by bots than humans. And so that poses another challenge because the bots. So what happens is, humans, there's some, you can summarize the output of humans statistically, right? And so you have this distribution with really fat tails, right? And those fat tails are the creativity of humanity, right? And that's where all of like the spice of output, all of the art that we all enjoy and like just the things that really catch on, it's always somewhere in those fat tails, right? Humans' ability to generate content in the fat tails. That's really where where
That's
the
like Kurt
creative
Cobain,
juices
Jimi
are
Hendrix,
flowing,
those
right?
guys. Yeah.
Did you see
Yeah.
that?
Then you have like, then you have like all the stuff in the middle, right? Where a lot of content's being generated, but it is of little value, and it just kind of just is a statistical output of just conversations, right? The word like the a and right. I mean, like we just have to use these words; they're common. When the internet starts being so when you take a sampling of that distribution, you are always going to undersample how fat the tails are. And so as you keep sampling and resampling, you're always getting a little bit less of the fat tail, and you're always getting a little bit more than you should of the stuff in the middle. And so what ends up happening over time is those fat tails, where all of that juicy creativity is, and where all of the spark of AGI, all the spark of humanity sits, it gets completely lost. And then the model actually just starts to break down and output, uninspired gobbledygook, and it's called model collapse. And that is a very real possibility here. And actually, there was a paper that came out recently where someone just asked the question of what happens if I keep training a successive LLM on the output of the existing ones that have been trained on all of the human data ever created, basically. And they found that the models do collapse pretty consistently. And so, yeah, for these models to get any better, they need more real human data. They can't just generate it. So this idea that they can just generate data forever and just it keeps getting better is not true. It'll actually get worse. So I don't know where they go from here. I think this is about as good as the models are going to get. I think that they're not good enough to generate trillions of dollars in economic activity, and I think this is all a mismanagement of capital. But
Yeah,
But
I mean,
did
you see that MIT report on on the AI startups? And it was like 95,
like
95%
like
of them
95% of them don't pan out.
they don't make
Most of
no, they
those
just
are
don't make
like,
money, and they have no prospect of ever making money.
Do you guys
yeah,
remember
but
the
that and
dot-com
that's
bubble?
Yeah, I do.
No.
Where if you had a
what's that?
website, you could get funding, and even if you
Yeah.
didn't do anything to generate revenue, you
I'll
would
have you
feel
know, I still use
overvalued.
pets.com every day.
So Nuke, I have something fun to point out about that.
Yeah.
I recently heard from somebody about a Y Combinator event that happened very recently.
that you attended.
You
And
probably can't say any of this, but go on.
so, well, no, I don't think they care. So what ended up happening was, apparently of the roughly 130 startups, right, that, you know, YC gives them all like $500,000 or something to do their thing. I want to say they said 4 of the companies weren't just straight up AI software as a service startups. The rest were. So
Yeah,
basically,
it's
like, I have a theory that these people are doing this just to collect money from YC and use it to buy Pontiac GTOs.
That's exactly what they're doing.
this is the same as it ever was, right?
Yeah,
I mean,
this
I've
is-
been interested in, and kind of, you know, I've attended some of these types of like VC events and angel investor events just to kind of see how they work and operate. And the exact same thing happened like, you know, 15 years ago, 20 years ago, and like the nanotechnology boom. Like everybody was doing nanotechnology, all the startups were nanotech, right? And it was just, it's performance art, right? It is a bunch of people who haven't done anything, who haven't built anything, who have no prior experience actually doing real work, who have learned the language of work enough to trick people with money into giving some of their money to them to do work that they can't do, but they say all the right words, right?
Right. And from the investment company's perspective, I have a feeling it's trying to cast a wide net over this, you know, burgeoning, what looks to be new industry. So, like, I don't blame them for doing that. Right. It's just
It's a
but
multi-level marketing scheme because yes, it is a little bit of a numbers game, but the only reason that the numbers game works is because there's another layer of money that can also be duped, right? So you don't necessarily, so you can, to some degree, you can bet on people. You can be like, oh, that guy is a smooth talker. He knows how to trick people into thinking he can do work. I bet that we can elevate this person in, you know, in the social construct of venture capital, and then trick somebody else into buying it from us for more.
Sounds like
that's
a
what they're
great
doing.
business
Yeah.
model.
Yeah. I mean, that's it. That's the whole goal. Right. I feel like that's the YC model as a creator in that network, is just, you know, make a product, get people to invest, sell the product for a bunch of money, move on to making the next product, and then the whole time you're basically using it as like an income stream.
It doesn't even have to be a good product. I mean, a great example today is Alexander Wang, right? The guy who created Scale AI. And his whole thing is hire a bunch of mechanical Turks, right, around the world to label data and then sell that labeled data to model builders who need to train on labeled data. And the data that they've labeled, they have a lot of it, but it's not very well labeled. And it's considered in that community to be quite terrible, despite the fact that it's not great, right? And he's a dropout. He all the perfect, like, just grifter. He checks all the grifter boxes. Dropout who makes a shitty database of shitty data of dubious value, sold it to Zuckerberg, one of the biggest money cucks of all time, for like $15 billion, and then goes and heads his SSI lab for a few weeks. And I don't even know if he's still there. I don't know what's going on there, but
Probably totally checked out. Like I would, if I just got that much money, I would check
ASI.
out.
It's no longer general intelligence, it's advanced super intelligence. God. Anyway, yeah, that whole thing was a grift. And whoever invested in Alexander Wang as a grifter was very successful in that exit strategy, right? nowhere did they really generate any real value to the world, right? They just, found a bunch of dick pics online and wrote dick on some of them.
Not all of them though.
Not
It
all of
sounds like
them. And
you're
sometimes
mad
they
you
wrote
didn't find those dick pics and get paid $15 billion for it.
hey,
I'm being
you know
honest.
what? No, I mean, I think that's fair. I think everybody, this is the perversion of our economics, right? You see these people who aren't actually doing real work, who aren't really doing much of anything other than performative art, and you see how successful they are at being rewarded for their performative art, and you think, oh, well, why am I slaving away and doing all of these tasks and trying to create real value for people to have a meaningful impact on society when I'm not being rewarded for it? It's a lot of work. And it seems like what everybody with money really wants is a performance, right? Performative art. I want to grift too. It's not fair that this class of people gets to grift and do nothing and live a life of largesse, and I have to actually work and struggle. I want to grift too. And so now everybody wants to be a grifter. Everybody wants to be a rentier. Everybody wants to be an aristocrat, right? And so then as and all of this being facilitated by the Federal Reserve and the government, who are addicted to also printing money, to make numbers look good and do all this make work and whatnot. And so you have this situation where grifters are being rewarded, capital is being rewarded with more capital, right? The only reason the system keeps working is because of how much the money supply grows over time. And the people who get the shaft are the people who actually do the work in the world, right? Because capital is valued so much more than labor that
Yeah.
you get this kind of decline. And this is, I mean, I think we're probably getting pretty close. Obviously, this is on like much longer time scales than the markets, but we're getting pretty close, I think, to a turning point. You see a lot of things, and people are just pissed off, they're tired, they're exhausted, and they feel unappreciated, and they're the ones actually building everything. I think something kind of broke like during COVID, where we actually like said the quiet part out loud. We're like, hey, you people at the bottom doing all this bitch work for almost no money, you're essential. And
Yeah.
all the people that are making all the money, you can stay home. And the biggest like work output that happened during COVID was all of these people trying to figure out how to trick their managers into thinking that they're working, and then the managers trying to find ways to detect the trickery, right? There's just like, that was the work output for like 2 years for most people, was trying to trick people into thinking, right? It's the grift, it's the performative art.
Well, the
And
thing is
yeah,
the problem was
we
that you
called them
also had.
essential, and I don't think they're going to let that go.
Well, and the big thing about that too is that some of the producers of the world, what they were doing too was like, especially I feel like it was in the software and middle management space, was they were going and getting like 4 or 5 simultaneous jobs because they could work from home, and so they would just juggle them
Yeah.
all until it all fell apart and make a bunch of money.
Yep.
And that's
Also
why there was this
PPP
whole
loans.
yeah, and the PPP loans
Yeah.
as well.
Here's a bunch of free money. You don't even have to. You just have to tell us, oh, we're going to use it to pay our workers. You don't even have to. Take the money, buy a house. Nobody gives a shit.
My
And we're
company at the
just going to
time
forgive
actually
it.
used it to pay our workers.
Yeah. Yeah. You guys are cucks. You should
Yeah.
have used it to buy real estate for your family.
We should have done 12 spin-offs of the company and then used those PP loans for each one to buy houses for all of our employees.
Yeah.
Yeah, it's all
Anyway.
fucked. The great financial circle jerk.
The great financial circle jerk, indeed. And, you start seeing things like, tricolor the really big subprime auto lender, hundreds of millions of dollars at least that we know about, filing for bankruptcy, and you've got big regional banks like Fifth Third's Bank and other fairly large banks saying like, "Oh, there's some fraudulent behavior there." I think these banks were aware of the fraud and were utilizing that fraud to try to make their books look better than they really do. And so
Oh
the
yeah.
question becomes, is this a contagion? Is this the beginning of something bigger where some of this hiding delinquencies and things starts to get unwound, or can they contain it? I don't know, but we'll see over the next coming weeks, if that is the case. But I mean, all that being said, coming back to the markets, I mean, everybody is extremely optimistic that this magical AI and humanoid robots, right? Elon Musk saying recently, if these things don't pan out, we're screwed. Spoiler alert, they're not going to pan out. You have all these people who are saying that like, oh, this magical thing is going to fix all of our very real, very big problems, so we don't have to think about it and we can party on and not, we don't have to start thinking about unwinding bad bets because they'll all get swept under the rug by this grand new technology. Once that starts to crumble and some of these bad bets start to fall apart, like this tricolor thing, then they don't have the time to wait to extend and pretend.
Yeah.
And so yeah, I was really interested to see that happen, and I'm interested to see if more of that occurs. And if that does start unwinding, it could get bad pretty quick.
I
As
just want to.
Dirk already mentioned, all of the other pain points with reserve, the economy is under reserved. That's just the long and short of it.
So I just want to point out
Well, it's
that
under reserved in the face of all of this fucking capex. It's under reserved in the face of the deficits that we're running as well. But I mean, yeah, I just did like some quick math, and it's estimated like 6.7 trillion by 2023. So it's like 1.34 trillion a year. So it's 0.67 trillion over the next 6 months. Treasury issuance is 1.3 trillion over the next 6 months. So it's 1.97 trillion by end of quarter 1, 2026. Current bank reserves are 3.34 trillion. So it's 58% reduction in margin ratios in the next 2 quarters.
If we actually go forward and try to build all this AI shit,
Yeah, or everyone bails.
Skeptical,
but it doesn't matter. It's like what I said last night. If all of these banks do absorb this debt and they allow this to continue to push forward, if you're sitting on, $1.3 trillion in Mag 7 debt, the first thing you're going to do is you're going to short the fuck out of that stock. And I think the reason we see institutions are still net short is because they're already doing that. They're shorting that stock in preparation for absorbing that debt.
Yeah, short the top.
And the only people long are retail and systematic funds, which can dump their exposure in 50 seconds.
Yep. And retail is longer than they've ever been since
Yep.
we've started measuring it. So how much longer can that go on? I don't know. It's already gone longer than I estimated. I didn't think we'd hit a new high this quarter so hard. So it's even worse. And this data is delayed, right? I mean, this is over, April through June, right? So when like in the middle of like that crash and that volatility. So it's even worse now.
Well, we know things can't get nasty till retail's holding the bag.
So they're holding it.
I mean, things are.
They're holding it harder than they ever have.
So I just want to point out something too, just as a little bit of a victory lap, but with the whole subprime auto loans thing falling apart, it has been deleted from it. It has been deleted from the platform, but I made a post back in, I want to say it was September 2021, saying that the ABS market was going to be the first thing that that does take a dumpy dump when all this starts falling apart. And it was my first real kind of post that was a warning shot towards this economy that we so blindly rampage towards, and then amplified even further with the AI hype bubble. We're all paying attention to mega corporations that have insane cash flows and all that stuff, and we stopped paying attention to the things that really mattered, like the things that actually make our products, as Jay Fresh was saying, and and actually make bank revenues for real.
You know, the thing
And
we
that's what
didn't
we're
account
ahead.
for, though, we never accounted, like back when we first started to get bearish, back in like the start of like 2023, after the market rallied and the banks failed, and we were like, oh, this is actually bullshit.
You
Right?
mean,
Because
you mean the point where I said the Fed should cut rates?
2022 made sense. 2022 sold off too hard. Like, we got bullish on the bounce because everything was just massively oversold. But then, yeah, when SVB failed and the Fed bailed them out, I think the thing we never accounted for in all of that was the double leverage on debt that everyone was going to pile into. And you see it most simply in things like CoreWeave, where they've taken on debt, they've financed this cloud infrastructure from Nvidia and these other startups, and now they're using those debt financed assets to additionally finance more debt in order to fund their operational costs. And so they're issuing debt on indebted assets at a rate which would seem financially irresponsible, and yet it is ongoing. And like, yeah, I really don't think we accounted for that additional layer of that. But now that layer is starting to get fucked. And I mean, th- this is so bad.
So I think, to boil it down in regular guy terms, this is kind of like you're sitting at dinner with somebody, and you guys have like let's just say it's onion ring appetizer, right? And so you're sharing the dip, and you got these onion rings, and so you see the other person take a bite of their onion ring, and they dip the bit ends back into the dip and continue eating and doing that over and over again. And after a few times, you just pass the dip over to them and say, "You just take this fucking dip."
Yeah,
So
I
I think
guess.
there's another analogy to draw as well. It's like, and a lot of people, started to have a better understanding of this after like the 2008 crisis, but it kind of got even worse, like in ZERP. So basically, it would be like, okay, I want to become part of the rentier class. I want to get passive income for doing no work. So I'm going to buy real estate and rent it. And rates are 0. And so what I'm going to do is I'm going to get a loan for some multi-family resident, whatever. And I'm going to get this loan at the lowest rate possible with as little down as possible. If I can even do 0, I'll do it, right? And I'll get an adjustable rate mortgage so I can keep that rate as low as possible because we're in ZERP. Yeah, let's go, baby. So then I get this house or this property, and it starts flowing rental income. And what do? Do I start paying down, right? Do I start adding equity to that, start paying down the loan? No, I take that rental income and I leverage that into more adjustable rate mortgages to buy more properties to flow more cash. And so what you end up having is a system that flows a lot of cash, but there is no foundation if the momentum slows, right? And so where does it start breaking down? Either rates go up and you're no longer profitable for the prices that you're paying on the loan, or people start dropping off and not renting your property because they can't afford it. And so that's when it all starts to unwind. And when it starts to unwind, you realize, oh, like all of these lenders have lent on nothing, right? There's nothing at the end, right? So one lender goes after the next, and they all just hold the bag because there's nothing there.
Yeah.
Now, the same thing is happening with AI chips, right? You want to buy these chips, you don't have any cash, so you get a loan. You buy the chips. They start it's the rentier class all over again. They start producing rent, right? Somebody rents it. What do? Do you start paying down your loans? Do you start building equity in your chips? No. You take that cash flow collateralized by the chips that you don't actually own because you have no equity in the chips. That's all a loan that somebody else gave you. And you leverage that to buy more chips or data centers or whatever it may be, right? And you just keep doing this. And so when does this break down? Well, it breaks down the same way that anything else breaks down, right? Either people stop renting your chips, right? You get too much, you buy too much, and the people just cannot sustain the prices that you're selling it for, or choose not to. Or your financing falls apart, right? Like rates get modified. Now I don't know, unlike the real estate one where there's adjustable rate mortgages. I don't know what the details of these loans are, right? Are these adjustable rate? What are the consequences here? I do know that the rates are quite
Fixed.
high.
Yeah, they're definitely fixed rate.
Yeah. So
A non-zero amount of them are also controlled.
yeah, so I do think that they are relatively, so unlike housing, which was very sensitive to rates, and that is starting to crumble. Like people are extend and pretend, but there are lots of issues in real estate right now because the rates rose and everybody had that exposure to rates. I think with the chips, there isn't really that exposure to rates, but there still is that big exposure to, are the renters going to keep renting? And if you look, one of the numbers too, the census part of their survey, they look at AI adoption by company size, and we are seeing a drop off in large companies. Kind of with that MIT study that Girk talked about a second ago, at the 95% of AI efforts at companies don't pan out. We're starting to see that the churn is starting to catch up, right? There's more companies that are quitting trying than there are new ones to still try, and that is a troubling sign, right? So yeah.
I mean,
when does it all
a lot
really
of
start
this
falling
is
apart?
a lot of this is just like a standard capital cycle, right? I mean, we've got the speculation in equities now. That speculation now needs to become a reality because equities have about maxed out, whatever future value they can have. And sure, the market can move up a little bit more and we can continue to ride, increases in like total money supply. But ultimately, like valuations are where things are presumed to be, but those things need to be paid for. And so in order to continue to advance this thesis, they've got to issue the debt. And so the interest is going to shift from the equity market to the debt market because all of this debt issuance obviously presents a huge, short opportunity on corporate debt. And and then as that corporate debt is picked up, that's going to create a huge short opportunity on the equities, until, things become built out. And this is no different than, if you're long a company and they're like, we're going to buy a bunch of shit, and their stock goes down in the near term, but their long-term gains then match up with the initial speculation. Except, there's a big difference in this, and that, like, usually when companies are investing that money, it's from reserves, and in this case it's from someone else's reserves. And I think, like, both of your analogies Okay, Dorks kind of didn't make sense with the onion ring, but I think maybe he just has like germophobia. Like,
But it's an analogy for double dipping. Come on.
yeah, no, I know. But like,
And he just has to dip
what's
over, which is like
what's
letting it
really
happen.
happening, because we're not buying tangible assets here, we're buying chips. Is what we're getting is like, we're getting like, imagine somebody goes and buys a car, and then they put that car on Turo, and they've financed the vehicle, but off of Turo, people renting their car every once in a while manages to cover their payment. But they think, well, my payment's covered. If I add another car to this, I can start to make a little bit of profit. Like, I can make that like 3% edge, and I can double it. And so they buy another car, and they put that on Turo. And people are, driving their cars around and paying them money, and they get another one and another one and another one. And they're saying, well, look at all these cars I own, give me money to buy more cars. And banks are like, all right, like the current value of those cars is relatively high, but the thing that's not being factored in here is that the depreciation of those assets they are depreciating at a rate faster than they are accumulating any equity. And so you've got this like negative equity edge on all of these chips that have been financed. And so, at the end of this, you've got like 500 car loans on 500 cars, and none of those cars are actually making any profit. They're simply paying for their own depreciation and existence. And so if there's a failure or a hiccup, or you go a month without somebody paying, to rent one of these vehicles, now all of a sudden you've eaten a big negative edge on that equity, because now you have to pay out from reserves to cover the difference between the two, but the rate of depreciation does not stop, it continues. And so, at the end of this, with all of these chips that really don't have they don't have long-term value. They're a disposable product. They're not even a durable good. Um, you know, um, these chips are not going to be worth anywhere near what was paid for them. And like, yeah, that's great for Nvidia. They make out like a bandit, but Nvidia has been also funding the purchase of all of these chips themselves.
Yeah.
So
And renting. Yeah. Yeah. Through various schemes. Yeah.
so even
I think this kind of comes back to the
they
whole
haven't created a moat for themselves against this. And so when the time comes and profits are expected and they are not realized, and all of this money has been shelled out not only once but twice and three times, and leveraged and leveraged and leveraged on these depreciating assets, and it comes time to claim some of those assets back, they're worthless. There's like there's nothing there. It's almost like you got a loan on a house, you tore the house down, and then you told the bank, go fuck yourself, and then you walked away. Like, and that's what we're kind of hurtling towards, and we're trying to issue another layer of debt to keep the show running. Except this time that debt has to be backed by something. And the Mag 7, they can back it with cash flows for a bit. Like, they can at least support, like, we want to issue debt because our cash flows are gigantic. But their cash flows aren't going to change meaningfully due to all of this technology they're buying. And I think 2 years into this, we've already proved that beyond a reasonable doubt. So someone needs to come in and agree that, like, they're going to lend out, $6.5 trillion over 5 years, but with no potential for return. There's no these are just completely unbacked loans.
I mean, this kind of comes back to my anecdata from last night, where, on some of the FinDom things I watch, you have these people with a bunch of credit card debt at crazy interest rates, and they are also invested in the stock market, thinking that is, their wealth is outpacing their debt. It's kind of the same thing, except instead of it just being credit cards for, eating out and spending $800 a month on eating out, it's, you have these companies who have these chips and they have them on loan at an interest rate, but it's not just interest rate, it's interest rate and depreciation,
Yeah.
and whether or not that's about to outweigh their yield.
Yeah, this infrastructure that they're building isn't even durable. I mean, like, sure, the building will stay, and the, whatever power source they invest in will probably have like a 35-year lifespan. But the chips and the stacks and the cables and like all of that degrades. Like, it is worth the most the moment it is bought, unless profit can be extracted from it. And I mean, even if they flipped all these data centers to like mining crypto, they're not going to make enough fucking money to cover the depreciation of all of that, and the constant upkeep and replacement, and I mean, there's a ton of overhead that goes into these as well, separate from that. And so, you've got a negative cash flow yielding asset that's depreciating at 20-30% a year, that you're paying 12% interest on, and then you've gotten fucking additional loans in order to cover that overhead against that asset. So you've got another, 12% APY packed up on top of the original 12% APY, lent out to cover the building of the fucking asset. And I mean, this is just like one of the biggest, like, financial foibles I think I've ever seen. It's like a Ponzi scheme on crack. It's got so many fucking layers, and then there's still no money. Like, there is no return on any of this shit.
Not that we can see.
Yeah, I mean, these companies are still just growing at their standard rate. They're not, besides Nvidia, nobody's really massively exceeding their presumed growth rate over time. It's not like Google's selling like 50% more ads. They're just selling slightly more ads. And a lot of these are mature companies too, that just like, they don't have that much room to grow within their own space, and they're all fighting with everything they have and their entirety of their cash flows and future cash flows for a piece of this pie that doesn't make any fucking money.
Yep.
And they're cutting employees, they're cutting their cash flows down to nothing, and now they're going to start issuing debt to continue to facilitate this dream where in reality probably only one of them would win if it was profitable. But I think they're all at the point where none of them have a choice. Like, they have to.
Yeah, well, it's the asymmetry of the bet, right? If they really find a way to birth God, it is winner take all. And if they birth it, they will make an ungodly amount of money, unintended. Also potentially even destroying capitalism. It's extremely unlikely that anybody is going to do that, but they all can't risk the fact that somebody else might, because then they
can't. I agree with that absolutely. I think that's why they're all so committed to what is obviously a terrible fucking financial decision. Because if anybody else gets ahead, everybody loses.
But if nobody gets ahead, then they all lose, and they all kind of deal with it together. They're all at least still on a level playing field, right, with each other. So all the monopolies are still kind of like in the same boat.
Yeah.
And the risk, the odds that like they're all gonna go under from this is really low, right?
I think most of them
they'll just
would.
Because
that's the end of the like a capital cycle, right? Is that everybody invests, capex booms, and that leads to overbuilding, and then if returns fail, then you get bankruptcies. And like equity investors, like actually your average person, they can survive that. They can, we've seen a million investors that sat post.com bubble in their $17 a share Microsoft waiting for their big payout. But banks and life insurers and private equity who think they're sitting on this highly rated debt, they cannot survive that.
Yeah, it's gonna be
We've
fun.
proven that time and time again. It's just not something that can happen. And so
all of this could have been avoided if only the Federal Reserve had the balls to stand up to the big bad market.
I think this is where the buck stops for the Fed. I think they've got to, if they don't do QE, everybody has to reassess this entire thing.
Come to Jesus.
Yeah. All right, so we're looking for QTQE language this week, not really caring too much about the rate.
Yeah, I don't think the rate matters, because if they cut rates, lending's going to accelerate and rates are going to go up because there's no fucking money to finance all of it. So you could cut rates to zero on Thursday. The fucking top end of the curve's still going to keep steepening. I mean, since August 1st, the 10-2 that we track on the yield curve, the vol, like the forward yield of vol thing, Dork.
Yeah.
We have like the 10-2 curve, and then we have the vol curve. The fucking 10-2 has risen 120% since August 1st.
Nice.
It just keeps marching up. And the last time it marched up was prior to April, and then the fucking market crashed. Briefly, but it crashed.
Yeah.
And then I feel like the second time, retail's not going to have any money to get in at the bottom again. Like, retail missed the boat on the first run, so they created their own. And this time around, who's going to have... I guess the banks will be okay, because they're going to short the fuck out of this, but... Not if they spend all that money on fucking Apple's debt.
Apple, the government, Meta, Microsoft.
Yeah.
Yeah. All right. So markets go up this week.
Yeah, probably.
Yeah, probably. I think. Well, at least into the middle of this week.
Yep.
I think we could.
They're going to trundle our way up to like what?
I don't know. Tomorrow looks kind of bearish, but then we probably mean revert whatever drop we get tomorrow into Wednesday. So push back up into the Fed meeting on wishful thinking, and then the Fed decision, which is, I mean, like, I think even with all the amount of de-risking we might see tomorrow, I think is going to be very indicative of how pronounced those charm flows are going to be into the end of the week. Because we saw de-risking of out-of-the-money put positions into the end of last week. That's probably going to continue a little bit tomorrow, because some people are just up and they just want to get out before the risk, like the macro risk, is even present. And if those people are getting out,
shit,
that makes it a lot more unstable for the people that want to stay in. What?
You know what we got ourselves?
What do we got?
We got ourselves a good old-fashioned Keynesian beauty contest.
Yes, we do.
Yeah.
You do love
Who's
those.
going to get out? Yeah, I absolutely love them, right? Oh, we need to get out on Wednesday before Wednesday's decision. Oh, but everybody else will want to get out on Wednesday, so we should get out on Tuesday. Oh, but those smart people are going to get out on Tuesday, so we should get out on Monday. Oh, I love it. I love it. The key is that everybody's going to be out by next Tuesday.
Do you guys remember in 2008 when bank reserves were 200 million?
I was
didn't even know what a bank. I didn't know what a bank reserve was in 2008.
46 billion in bank reserves in 2008. Now they're 3.34 trillion.
I was just going to grad school. I did not care about the economy. I was still in school.
700 billion of that was just government money. Actually, 700 billion of that, and then 1.5 trillion of that. So 2.5 trillion of that is just future taxpayer debt.
Yay.
So bank reserves,
so what do we think's going to happen?
Realistically, are like Interesting.
I want to go first. End of week 6,600.
Okay. All right. Hold on. I'll draw lines. let me pull it up.
Black gang, baby. Violently flat. Next week, 4,000.
Can I go next?
Hold on. I gotta find the fucking line. There we go. I haven't drawn these in a while because you guys are never around. All right. JFresh 6,600. End of the week.
My turn.
All right. Yep. Go ahead.
All right. 65.99.
Oh, you asshole.
I'm just gonna put you as close as I can feasibly get the mouse. Oh wait, I got it.
Yay! Thank you.
I think
You're 65.98.
I think
No,
we
don't box me out.
move down towards 70 tomorrow. Continue down towards 70, and back up into Wednesday. 6,600. I think relatively, maybe close Wednesday at like 65.90, and then I think Thursday down, end of week failure.
You're gonna have to screenshot this. I'm on my phone.
Yeah, that's fine. I like how you guys have essentially the same prediction, though.
I mean, it's just I don't think that the Fed is gonna be either here nor there on their hawkishness on quantitative policy. I guess you'd say.
They have to
They're
say
gonna be
something. Have you seen repo?
Yeah, I think they're going to say we remain vigilant of the data.
Repo
we'll make
fell
our
to
decisions.
17.33 billion, the lowest since April 2021 on Friday.
We remain data dependent. I reclaim my time.
Then what do we just crash then?
Yes.
The Fed just
Sorry, you're my
ignores repo and continues quantitative tightening into bank reserves.
I hear
Probably.
that kitty.
That would create a massive amount of volatility.
Yeah, my cat agrees.
Okay.
I love your cat. I can't wait to meet your cat one day.
She's great. She
Well,
was terrified of the
now
girl.
I want to change my prediction because now I think we.
What, you want to go to like 1,000?
We just dropped to Vega neutral, right? Back to Vega neutral because the concavity of returns and like increased vol is just going to force the MM to sell off until they're neutrally exposed to Vega.
Okay. That
Okay.
jives.
Yeah, I'm just going to make it even more bearish.
Tracks.
Doesn't hurt me.
I mean, yeah, I don't. Yeah, and then it's going to be great. And the political theater that happens because the market went down because of whatever the Fed did doesn't even really matter, in my opinion. It's going to be interesting.
But is Trump going to get incensed? I think if he has another stroke, he's done for. So
Yeah, they may put him on. They may put him on a bunch of Xanax before the print.
does JPOW know that if he hikes rates 25 points, he could kill Trump?
Oh, Jesus Christ.
Yeah,
I don't think I can handle the
it's too much
AI
power.
slop that's going to be.
It's too much power for one man.
There's going to be so much cringe AI slop of Trump dying and going to meet Jesus.
Oh God,
it's going to be awful.
Heaven.
Yeah, the Messiah.
Dude, they can't have it happen yet.
Which one, Trump or Jesus?
I don't know.
Yeah.
Does it matter anymore?
It's going to become the Holy Quaternion.
Ooh.
And
The Father, the Son, the Holy Ghost, and the Trump.
The grifter.
The sour mushroom. Anyway,
Yeah.
well, that got weird.
Baby farms.
Yeah, I think we're done.
I think
Yeah,
we
okay.
covered literally everything.
Yeah. My grill's done. Grill's done breaking in. Worked great.
Yeah, I'm gonna go warm up a what'd you call it? Big old penis.
Yeah. Big old dick.
Old. It was very important that it was old.
Well, I cooked it yesterday, so it's old.
Can you talk long vol strategies for this week? It's you take
Buy puts.
you go long on volatility.
It's called a
Why
put.
do people ask me about this? It's like it's the world's dumbest strategy. You just buy Vega on puts. Boom, long vol. The more theta
Read
you
the
get, the
docs.
longer vol you are.
Yeah, strangles.
Re-
Strangles are long vol.
Hold on. They could read the docs.
They
They
could.
could.
Go to Vega on the docs.
I remember when we first talked about Vega puts, and I remember explaining it to people. But then I was just like, why am I explaining this? It's just far out of the money puts with theta.
Well, it depends on how far out of the money you are. You kind of want the point where the I'm not going to say it. Never mind. I don't want to start a whole nother conversation.
Should I just close this out by reading the docs on Vega?
Ooh, do you want to?
Maybe that'll get people to actually read them.
I don't know. Maybe we could just tell people to read the docs on Vega. Save your beautiful voice for later this week.
All right.
All right.
Yeah.
All right.
doc/opfund/Greek/Vega.
There you go. Gammastrike.com.
1.4.3 in the documentation. Go read it.
Go read it. It'll tell you everything you need to know about getting exposure to long volatility.
Yeah, it'll explain out of the money options in ways you never wanted to hear it.
It's literally like one page. It's not that complicated.
There's strangles. There's inverse condors.
It's literally just strangles.
Well, an inverse condor is a strangle.
Yeah, but it's also got short options in there, and nobody likes those. Selling options is illegal, according to Popcorn Trader.
Yeah, but his background in law is purely Somalian, so
Yeah,
all right.
he managed
Baby
a
farms.
Somali option portfolio, and he
Baby
lost everything.
farms.
Baby farms.
Yeah, fuck off.
Farms.
All right.
All right.
I'll leave.
See ya.
Later, guys. Thanks for coming on.
Thanks for having us.
Guys, as always, thanks for tuning in. I will have Pickle's Picks out tonight. I hope you enjoy the rest of your weekends. Later.